So my name is Joshua Martinez, and this evening what we're going to be doing is sharing with you a handful of things. We're going to share with you a methodology and a strategy, a way to really break down the markets. And what I mean by that is when you turn on your computer, we're going to view trading the same way that a corporation views business in regarding the hierarchy. Sometimes, and let me kind of relate this to you. If you run a business or run a company and you're one person and you try to do everything on your own, traditionally the company's growth opportunity is hindered because one person just simply can't do everything. And usually for a company to scale and grow bigger and bigger, you're going to have the ownership, then you're going to have the CEO with the vision, then you're going to have the president who's going to execute the vision of the CEO, and then the president's going to have some executives who are going to be responsible for certain sections of the company, and so on and so forth. So this way, responsibility is dispersed, and there's multiple individuals that can assist. And what I mean by that with trading is when you look at and you turn on your computer and you look at one chart and you look at one time frame and you're trying to find direction, entry, stops, limits, risk management based upon one time frame, you could be stunting your growth. And so what I want to do is I want to try to share with you a different point of view when you turn on your computer, utilize multi-time frames to help you find direction at a very high winning percent, to help you get your accuracy rate to over 70% and trading in the appropriate zone. So we're going to go through a top-down filter process, and it's going to make a lot of sense, and it may be a completely different way than what you've ever viewed the market before, but this technique and this way of viewing the market, and by the way, you can use any entry strategy of your choice with it, and this usually works on any investment arena. So whether it's stocks, options, futures, forex, cryptos, whatever, I've utilized this and I was able to go 22 calendar months in a row of continuous gains. So with that being said, let me just do a quick little risk disclaimer, and we'll jump right into the live markets because I want to demonstrate with you, demonstrate on the chart so you can kind of see it in action. So in front of you is the risk disclaimer. It just means there's risk involved. You should never invest money you cannot afford to lose. Always keep risk management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. And what that basically means, what I'm going to share with you is research. Ultimately, what you do with this information is completely up to you. We are not CTAs, which stands for Commodity Trading Advisors. So we're not here to dictate your trades or customize investment advice for you. We're not money managers, so we'll never ask you to give us money to trade on your behalf. So once again, this is research. So we're going to talk about how to determine direction, how to trade in the right zone so that we can win about 7 out of 10 of our trades, and then how we can utilize multi-time frames to understand short-term moves versus long-term moves. Who am I? My name is Joshua Martinez. I've been trading and educating for over 11 plus years. I've hosted well over 5,200 presentations and seminars. I'm teaching people how to train or trade inside the markets. I've trained over 1 million individuals over the last 10 plus years. And yeah, so here I am. So let's go ahead and jump right into the live market. Okay, so does everybody see? You should be able to see INTC. It's Intel Corp monthly time frame on your charts. And you may want to get a pen and sheet of paper and write down these notes. So a couple things. When you turn on your computer, you have to be able to determine direction, okay? And a lot of people, when they view trading, they kind of get overwhelmed. But what we want to do is we want to make this relatively simple and straightforward. Look, this market can only go up and it can only go down. If you just close your eyes, put a blindfold on, and you just flip a coin and guess the direction, you have a 50% chance of being right and a 50% chance of being wrong. Type in a yes, why yes, into the question section box if you understand your baseline odds of being right or wrong if you just guess the direction are 50-50. What we want to do is use a methodology that can simply help us be right more than half the time consistently. And then as long as we win just a little bit more money than we lose, then ultimately we'll make money over time. that means that you're going to have risk management. So don't risk all your money in a single trade, because if you risk it all in a single trade, it just takes one trade to lose it all. So as long as we win more than half our trades and we make a little bit more than we lose, then we're going to make money over time. Okay? So when we turn on our computer, I like to look at the monthly time frame for direction. And specifically, I'm looking for U-turns, okay? And I'm going to use trend lines, Fibonacci's, and supports and resistance to help me find these U-turns. Now, in the previous sessions, I was able to come on here and teach trend lines to find U-turns, and also to teach Fibonacci's to find U-turns. So it kind of seems like this is just another lesson. Now we can really put things together. So if you haven't watched those previous recordings, I'd recommend for you to reach out to support and ask for them. But ultimately, if you can't determine direction, then you really should not be trading the symbol or the stock or the ETF or whatever you're looking at. And what we have to say is, if we determine the market's going up, we have to say we're going up to this price point. And if we say the market's going down, we have to say it's going down to this price point. Or if we say the market's U-turning, we have to recognize it. So here's a trader's tip. You may want to write this down. Okay, so trader's tip. The market or markets usually U-turn at, on, and around the same price points and angles. So what we want to do is we want to be able to identify where does the market U-turn. And one of the things which I like to do is I like to look at the live market and put a trend line on. And I like, instead of going backwards to forward, most people teach trend lines going from back to forward. And textbook wise, and and I used to, this is the way that I learned how to draw trend lines. Start from the bottom and work your way up. The purpose of trend lines, you may want to write this down. Another trader's tip. Three things that trend lines do. Trend lines provide three things. Number one, they give you a buy zone / sell zone. Number two, they'll give you the speed of the market, how fast or how slow the market's moving. And number three, they'll give you U-turns, and these U-turns equal opportunities. Okay. And let me do this. I'm going to put these inside the question section box in case you want to copy them down. So here's the first trader's tip, and then here is the second trader's tip right here. Copy. And then what I'm also going to do is I'm going to share these charts with you at the end of the session too. So all the notes I'm putting on here, you'll be able to have it. And so what I like to do is I like to find the previous low and then work my way back. And when I work my way back, when I'm focused I'm focused on trying to find where does the market U-turn, because U-turns equal opportunities. Do me a favor, type in a yes in the question section box if you can visually see that this market generally has been forming lows at, on, and around this bottom blue line. So Samuel says yes, Peter says yes, Caroline says yes, Marcus says yes. Okay, good. Now, it's important because this is about a 5-year trend or a 5-year pattern. Since August of 2015, the market has been U-turning around this area. And so what we want to do is we want to say, okay, well, if this market's U-turning on the way up, where could the markets go up to? Because we can't just say it goes up forever, because that's kind of silly. Sure, there's going to be a catalyst, and sure, you want to make sure the company itself, is in a position to continue to grow. But ultimately, whatever caused the market to go up, normally the markets like to U-turn at, on, and around the same price points. And also the markets like to form beautiful or symmetric trends. So oftentimes you can just simply copy the angle on the way down and then drag it on the way up. And that will kind of give you the idea of where the market's forming highs. Type in a yes if you can clearly see that this market is forming highs at, on, and or around the top blue line, which is pretty much the same exact angle as the bottom blue line. So what we have is we have ourselves a channel, and we have now if we take a look at this previous high, we have a 6-year pattern where the market has successfully traveled back and forth between the bottom blue level and the top blue level. So ultimately, if this pattern were to continue, then we're going to anticipate that this market will rally back up to $69.42. So we're right, $69.42, and we'll say monthly future high price, otherwise known as resistance. Resistance is just a fancy word for future high price. And the reason why we believe the market will form a potential high here is because it's been doing it for 6 years. And the reason why we expect the market to form a low here is because we've been doing it for 6 years. If this market were to increase in value to $69.42, it's about a 38% increase, about an $18.85 move, or a 30+% increase on the stock, or almost 40%, excuse me, wow. So for those of you that kind of like to buy and hold for the entire year or for months at a time, this would be a good one. The only caveat here is we do have the United States elections coming out in about 2 months. And quick little facts on the U.S. election. I'll just give you my opinion on it. Based purely on policy, not based upon political view. Purely on policy, if Joe Biden wins, Joe Biden wants to increase corporate taxes. And if you increase corporate taxes, that means companies become less profitable. So therefore, they become what? Less valuable. And so if Joe Biden wins, you need to anticipate that corporate taxes will go up, and then more than likely all companies across the United States will devalue, so stock market will fall. Not forever, it just will devalue based upon value. If Donald Trump wins, Donald Trump is talking about lowering corporate taxes again, which will then automatically increase the value of companies across the United States, so therefore stock market rallies. So most people, they're not going to make major investment decisions until after they know who wins. Type in a yes, so that logically makes sense. And again, that has nothing to do with political view. I'm not here to get into a debate. I just want to look at it purely based upon policy and the factual data based upon, evaluating companies. So just be aware of that, okay? Now, who do I want to win? Well, I have a lot of investments, in the investment world, and I want the market to go up. So naturally, based upon policy, I want Trump to win. Because I want the stock market to rally. Okay, but regardless, you can make money both ways, because whether the market rallies or whether the market falls, this decision will be made after the election, in my opinion. And you can make money both ways. You just need to know how. So right now we have about a 38% buying opportunity if the market were to increase, and then you can only imagine what the increase could be if you trade an option, just a pure buy a call option type of scenario. All right, so now if this market is going to rally and the direction is up, and what I mean by that is we look at the monthly time frame purely on direction. According to the statistics of the last 6 years, as long as the market stays above the bottom blue level, we're expecting the market to increase by 38%. Type in a yes, why yes, into the question section box if you understand that thus far. Because if we cannot come into an agreement on direction, we cannot trade this symbol, period. And that's kind of the attitude that you should take. Look at your monthly time frame as the CEO of your trading plan. The CEO of a company casts the vision. The CEO says, this is the vision I have for the company. This is how big we want to grow. This is the service we want to provide. And this is the experience we want everybody to have. And this is how we're going to do it. When you look at your monthly time frame to find direction, that's your vision. And you should be looking and focus on buying for months at a time or selling for months at a time. Maybe not buying and holding and selling and holding, but you need to have the determination of this stock or this ETF or this futures or whatever you're looking at is going in this direction for months. And if you can't determine that, you really shouldn't be trading the symbol, okay? Now, in this scenario, we're going to be expecting the pattern to hold. And so what we want to do is we want to go to a daily time frame, and we want to find low prices to buy, because there's a couple of things I need you to understand. In trading, once you find direction, if you have a lot of money, and you don't mind losing a lot of money, you just enter into the market and you hold your position. And if you're right in the direction, you make money. That's just kind of how this works. But for most people, they want to minimize drawdown. Type in a me, M-E, into the question section box if you're the type of person that says, hey, I don't like it when the market goes against me. I don't like it when the market, if I have an unrealized loss, I don't like that. That's called drawdown. Okay? Some people don't care. They just say, hey, as long as it goes my way, then that's okay because I'm an investor, right? They take it, you know, and that's what a buy and hold investor will do. They'll buy the market, bring it up. Everyone else, what we're going to do is we're going to strategically look to maximize profits by minimizing risk. And how we do that is we go to a daily time frame. And on a daily time frame, the purpose or the goal of your daily time frame is going to be high price, low price. Okay? And so I want you to think about this for a moment. If the monthly time frame says we're going to increase by 38, 39%, it's probably going to create a bullish trend. And so what we want to do off of the daily time frame is strategically we want to find the low prices. Why? Well, before we draw any sort of trend lines, I just want you to visually see how the market reacts after forming a low, okay? And so I'm not saying we're buying these markets. I'm just pointing out the lows, and I want you to see how the market reacts. 1, 2, 3, 4 days of upward movement. 1, 2, 3, 4, 5, 6 days of upward movement. 1, 2 days of upward movement. 1, 2, 3, 4, 5, 6, 7, 8 days of upward movement. 1, 2, 3, 4 days of upward movement. 1, 2, 3, 4, 5, 6, 7, 8, 9 days of upward movement. What I mean by that is when the daily time frame is at a low price and direction is up, that is the optimal time to look to apply a buying entry strategy. I'm not saying jump into the market buying. I'm just saying that you really should be monitoring that symbol and looking for the entry. And so if direction is up, what we're going to do is strategically go to the daily time frame and look for the lowest price points as possible and try to find the U-turn. And if the market can form a low, generally speaking, we can have 3 to 8 days of the market just going our way. Type in a me, M-E, in the question section box if you like the idea of having the you entering into the trade and having it just go your way 3 to 8 days in a row. Ricardo says me, Mike says me, Eric says me. Well, we want to go to the daily time frame to find those low prices because strategically that's where we can do it from. Now, what we want to do is we also want to find the U-turn. So we're going to go back in time, find out where does the market traditionally form lows, because that's where we want to focus in on buying. We don't want to curve fit this at all, but we also want to make sure that we are monitoring the potential U-turns. So when we take a look at Intel Corp, we'll notice how this market naturally forms lows at, on, and or around this blue line. Now notice how I'm not saying that the market is forming lows exactly on the blue line. I'm saying at, on, and or around. So I want you to think of these lines of just like bumper cars. The market's going to touch it, and then sometimes it U-turns right away on it, but sometimes it's going to stretch the line. It's going to stretch the boundary. And so that's why we say at, on, and or around. But since 2018, since January 2018, you know, two years and 8 months, every single time, 1, 2, 3, 4, 5, 6, 7, 8 times, 8 times in a row, every single time the market has touched this blue line, we have rallied. And we have rallied to the top blue line. Type in a yes in the question section box if you can visually see that once the market touches the bottom blue level, it heads towards the top blue level. Okay? And if this pattern is going to repeat itself, more than likely that's where it's going. And so what we want to do is we want to strategically, number one, recognize that, and number two, understand direction should be up. This is realistically the 8th time that we've had this opportunity. It doesn't go up every single time, so it's not perfect, but we do have a very, very strong opinion based upon overall direction. So we're going to go 61.78 is going to be the overall target. 61.78 is going to be daily future high price. This is where we're going to anticipate a major potential U-turn to take place. And what I mean by that is when we go to the daily time frame, what we're going to do is we're going to expect the market to come up, and if the market's going to fall bearish, this is where we expect the market to fall. Why? Because it's been doing it for over 2 years and 8 months. Okay, now, how far away is that? That is about a total of 22%. That's 22% away. 22% away. It's a pretty big move on the stock. I'm not going to kid you. Now, how many of you were able to watch my Fibonacci lesson? If you haven't watched the Fibonacci lesson, I would strongly suggest that you reach out to Wealth Press support and just kind of ask for the recording, because it's definitely something definitely to watch. But Fibonacci is what's going to really guide us on the movement. And what I mean by that is this 22% increase, it's silly for us to think it's going to move like this. It's more than likely not going to do that. More than likely what's going to happen is the market's going to wave, because it's a pretty big distance. The market is more than likely going to make higher highs and higher lows and higher highs and higher lows. So strategically, we're going to expect a bullish trend to form. And when or if this market forms a bullish trend, Fibonacci is what realistically is going to guide us on the way up. What you and I want to do is we want to find these low prices to buy, and then the high prices to take profit, and then the low prices to buy, and then the high prices to take profit. We want to buy low, profit high, multiple times along the way. And as the market rallies, if we can buy these U-turns, traditionally we'll get 3 to 8 days of bullish movement. We take profits, we wait for the retracement, buy again, and so on and so forth, okay? Type in a yes, why yes, if this is making a little bit of sense so far. Okay, good. So now what we're going to do to guide us is we're going to bring in the Fibonacci sequence. Now, if you don't know your Fibonacci's, that's completely okay. You're going to benefit from the end goal in mind, which is basically the results. But Fibonacci's help us determine hidden levels of U-turn. So we're going to start from this lowest point, and we're going to start work our way to the very first high. It's the 1-2 boundary. We do have a retracement at the 618, so the extension will be the 1.618. What I'm saying here is we're going to expect this market to increase in value, touch the top blue level, and then fall, okay? That's how powerful Fibonacci's are. So type in a yes if you can see the market just touched the Fibonacci extension blue line. So if Fibonacci's are correct, I don't know what's going to happen. We're going to find out right now. But if Fibonacci's are correct, we should have a bearish retracement. Okay? Did the market retrace bearish at, on, and or around the Fibonacci extension? So therefore, we would have bought the market at the Fibonacci retracement. We would have taken our profit, which would have maximized profit because the market retraced. Okay? So now we bring in the next Fibonacci sequence. The deepest retracement of the old Fibonacci becomes the new one. The high of the Fibonacci becomes the new 2. Go through the lesson. If you didn't go through the lesson, you bring you up to speed. We do have now a 786 retracement. So the extension is 5402. So what does that mean specifically? It means next daily high price should be 54.02. Okay, so ultimately we need to be looking to buy this market towards 5402, which is an increase of 7.23%. 7.23%. Now you can trade that on the stock outright, or you can also buy a call option strategically, which we'll talk about in a moment. But ultimately, here's how this works. Once again, so I'm not losing anybody, we use the monthly time frame for direction. We have a 6-year pattern. This pattern says we're in a channel. We're at the bottom of support. The market is starting to U-turn, and it should rally nearly 40% toward the top. It's been doing this for 6 years. Unless the structure breaks, this is the direction. Because direction is up, we go to the daily time frame and we find the low prices to buy towards the high price. We notice that this bottom blue level for the last 2 hours has been U-turning the market 100%, 8 out of 8 times since January 2018. This market, when it U-turns, it heads towards the top blue level, hits the bottom blue level, goes to the top blue level, hits the bottom blue level, goes to the top blue level, hits the bottom blue level, on its way towards the top blue level, which is a 22% increase. We use Fibonacci's to guide us on the way up, and according to Fibonacci's, we're inside of an extension, and the market's moving from a low price to a future high price. We can also bring in what's called an inner trend line, which will help guide us where you can visually see the market historically forms U-turns here as well. So there's a U-turn, there's a U-turn, there's a U-turn. So what we're not doing is we're not finding random lows to buy. Type into yes if you can see that everything that we're looking to strategically buy has history of past U-turns at, on, and or around the price point or the angle. So we are utilizing repeatable patterns that duplicate themselves over and over and over again, which is very important. We're not randomly buying. Okay, so now if this market's going to increase to 54.02, which is a 7.23% increase on the stock, which is going to be much, much larger on the option, we want to make sure that we are strategically trading in the right zone. And what I mean by that is we could be wrong, and the fact of the matter is this thing could fall. It could completely fall. And so a filtering process that we utilize is we use the 1 hour time frame for the zone. As long as the 1 hour time frame is in the buy zone, we will keep buying the market until the market touches the daily high price, and then we'll back off. And then we'll put this all together and we'll do another symbol. So we're going to bring in a daily time frame specifically, okay, a 1 hour time frame specifically for the zone. So 1 hour equals zone. And all I really want to do is carry over from the daily is just the overall target. And and then I'm going to type all this out, and then hopefully all this is going to make sense. Okay. So, excuse me, we're going to map out coordinates 54.02. Okay. If we're going to increase in value, all I want to do is buy the market in the buy zone as it's making higher highs and higher lows. And all I need to do is bring in an uptrend line. That's it. And this uptrend line divides the market into a buy zone and a sell zone. Now, let me ask a question. I really, really want you to think about this for a moment, okay, before you answer. Type in a me, M-E, into the question section box if you want to win more than half your trades. Type in a me if you want to win more than half your trades. You're like, it is my desire to win more than half my trades. Okay, think about this for a moment. Buy or sell. There's only two choices. You can only buy and you can only sell. That's it. It can only go up and it can only go down. If you can get into the habit of selling the market only in the sell zone and buying the market only in the buy zone, by default, you should win more than half your trades. Watch this. You sell the market in the sell zone, breaks the downtrend line, enters into the buy zone. All you do is focus in on buying in the buy zone, and look how you would have won multiple trades on the way up. Now, the secret to trading, in my opinion, is following four rules to follow, okay, if you're going to trade this way. Number one, buy low in the buy zone. Number two, sell high in the sell zone. Number three, do not buy future high prices. Number 4, do not sell future low prices. Now, I get made fun of these 4 rules all the time, but I need you to understand that these 4 rules, I'll just put them in your question section box. These 4 rules are designed to force you to win more than half your trades if you're willing to follow them. Let me give you a prime example. Okay. This market is in the buy zone. We are above the uptrend line. We are in the buy zone. Because we're in the buy zone, we want to buy low in the buy zone. Right now, we're at a high price. So you would not buy the market right now because we do not buy high prices. Instead, you'd wait for the market to give you a lower price. And then now we're at a low price in the buy zone. So therefore, when we go to buy, we can minimize risk. But here's the key. Your job is not to guess the U-turn. Your job is not to buy the bottom. Your job is to trade the U-turn, not guess the U-turn. What I mean by that is you can't look at this and say, oh, this is the bottom, I'm going to buy it just because we're low. You can't do that, because what you're doing is you're buying the market when the sellers are still in control. And so therefore you're buying too early and you're going to get in trouble. And so what you want to do is you really want to bring in what's called a counter trend line. So whenever you determine that direction is up and you say, okay, this market is expected to rally, whatever you do, don't buy the market when the sellers are still in control. When the market's falling, don't buy the market. It's silly to do that. What you want to do is you want to bring in a simple line, and you want to say, okay, this line is a counter trend line. It counters the direction. The direction is up, so it's a downtrend, so it counters the direction. When or if the market closes above my counter trend line, it's going to signify that the sellers are no longer in control. It's going to let us know that the short-term move is over, and that probability says the buyers or the extension is going to take place. Now, notice how the market begins to rally on the way up after the counter trend line. Here's another dip. Now, you're going to say, okay, well, I'm not going to guess the low. I'm not going to guess the U-turn. I'm going to trade the U-turn. Counter trend line break, this is where you buy the market. Market begins to go up. A little bit of retracement, that's okay. As long as you buy in the buy zone, by default, we're scheduled to win more than half our trades. Here's a counter trend line break. We look to buy the market. Market goes our way, okay? Here's a little bit of retracement. That's okay. You bring in another counter trend line. Now, you're not adding to your positions. These are all just individual entries. But what I'm saying is this. We're going to expect this market to go up now because it broke the counter trend line. And notice how the market begins to rally the very next day. These are nice, juicy trades. You buy the market with a call option, a big gap the following day. You get a nice little exit, overnight winner. There's another counter trend line break, bullish. And you just kind of play this game back and forth, back and forth, back and forth. Let me ask this question. If you were to bought any of these counter trend line breaks bullish, could you have made profit? Yes or no? Could you have made profit as the market has been pushing up? Yes or no? And for the most part, did the market begin to go your way after you entered in the counter trend line break? So our job is not to guess the U-turn. Our job is to trade the U-turn. And the reason why we wanted to use this exercise is because when we say, hey, you know, the market is expected to increase 54.02%, or sorry, to $54.02, which is a 7.23% increase. What we're not saying is let's just jump in the market willy-nilly style for no reason. We want structure. We want to make sure that when we buy the market is set to go our way. And so we're going to strategically use what's called a counter trend line break bullish in the buy zone. So we bring in our uptrend line, our up angle, and then what we're simply going to do is we're going to notate that, hey, we got a couple counter trend line breaks here. There's counter trend line break 1, there's counter trend line break 2, counter trend line break 3, counter trend line break 4. These are all buying opportunities. Realistically, we want this market to come down near the uptrend line. We want to bring in a counter trend line, and then we want to buy the market as it's breaking the counter trend line so we can catch the extension. So we're going to say entry, counter trend line break bullish in the buy zone, in the buy zone, okay? We want to place our stop in the sell zone. This one's pretty simple. We'll place it below the previous low. Stop will be 48.86. Stop will be 48.86. And then the limit will be 54.02. Super simple, okay? Now, you can trade the stock if you want to trade the stock, or you can go buy a call option, you know, do 2-3 months out and get nearly you probably get a 60+% on the premium. Okay, so once again, monthly time frame we use for direction. Okay, monthly time frame is for direction. We have a 6-year pattern. Direction is up. We're expecting nearly a 40% increase. When we buy, you tell me, if you want to buy the market, do you want to buy low prices or do you want to buy high prices? What do you want to do? If we're expecting the market to increase by 40%, do you want to buy low or do you want to buy high? What do you want to do? David says buy low. Mike says low. Sunday says buy low. Samuel says buy low. Francis says buy low. Karen says buy low. Okay, we go to the daily time frame to find those low prices. The reason why we go to the daily time frame for low prices is because on the daily time frame, once it forms a low price, we normally see a 3 to 8 day bullish follow through, which means if you can catch a daily low, you can generally just continuously make profits day over day for 3 to 8 trading days to follow. Our daily time frame says that we're inside of an up angle. We just came off of a low price, so we're heading towards a Fibonacci extension, which is our next high price, which is 54.02. We want to make sure that we're in the buy zone because by default, the market can only go up and they can only go down. So if we have direction and direction is up and we have a 7% increase, as long as we're in the buy zone, by default, we should win more than half our trades. We go to the 1 hour time frame for the zone. 1 hour time frame is above the uptrend line. We are in the buy zone. All we need is a low price in the buy zone to buy, but we want a counter trend line break. We're not here to guess the U-turn. We're here to trade the U-turn. We buy at a low price after the buyers have taken control. I want you to think of trading like a tsunami of traders, okay? You don't want to be the first person to buy. You want to buy when the tsunami buys. You want to buy when the crowd buys. Type in a yes, you understand that you do not want to be the first person to buy. That's not your job, because if you're the first person to buy, you're going to start praying and begging that everyone else buys after you, which is a miserable experience. Any experienced traders knows exactly what I'm talking about. So you want someone else, you want the crowd to start to buy, and as the crowd buys, that's when you buy. And we understand that by buying these counter trend line breaks bullish on the way up. It will give us a little risk, a very large reward. Now, here's what I'm going to do. I'm going to rename this chart, and I'm going to say 0916-2020. We're going to say wealth. We'll say Wealth Press TV. Okay, INTC. We'll save it. And we'll turn sharing on. And do me a favor, click on this link. I'm sending you a link right now. This is going to give you all my notes. Once you click on the link in the question section box, it's going to bring you directly to this page. This is your inside window to my charts. I have your top charts, your monthly time frame, the middle charts, your daily time frame, the bottom charts, your 1 hour time frame. These are interactive charts, so you can move everything around. If you want to make the window bigger, look at my mouse. Look at it right now. Stop doing what you're doing. Look at my mouse. Bring it down to the middle of the chart. Maximize button will appear. Here you have all my trend lines. You have all my direction. You have my notes. You have my trader's tips. Okay, monthly timers for direction. If you want to minimize the chart, well, look at my chart. Look at my mouse. Bring in the middle. Look how this little box pops up. Okay, minimize it. Then you go to the daily time frame. You have all my notes. You have all my direction. You have the 2-year pattern, etc. Okay. You have the arrow. You know exactly the direction. You know the longer term move, and then you can go to the 1-hour time frame. And now you have the stop, and now you have the limit, and then you're looking for the entry. You can use this as a trade the option as a proxy if you want. What that means, instead of trading the stock, you can go buy an option, a call option, 2-3 months out, okay, whatever you desire for your strike rate, and then whatever you're comfortable with investing. And then if the stop gets hit, you close your option. If your limit gets hit, you close your option. Type in a ME in the question section box if this is helpful. Type in a ME if this is helpful. Okay, good. Good. Let's do another one, okay? We have about 19 minutes left with each other, so let's do one more. We're going to look at MU, Micron Technologies, another good one, okay? And here you go, Susan. Here's the link. I'll send it to you again. Here's the link in the question section box, like so. Okay, so MU, Micron Technologies, and in this Micron Technologies, this one's a pretty good mover. I'm not going to kid you. It's been slowing down, but most of your stocks, in my opinion, especially your indices, you know, you're going to see like your QQQ, your SPY, you know, your E-mini Russell 2000. You're going to see all that stuff slow down the closer you get to the election. So, for people who are buy and hold traders, just being very transparent, no, you know, the market's going to be kind of quiet for the next couple months. You're going to get some wild whips and movements based upon announcements, and you know, if the polls come out that Donald Trump's in the lead, you're going to get a swing, and if the polls come out that Joe Biden's in the lead, you're going to get a swing, and all this stuff's going to happen, right? So, but you really aren't going to get the big move until we find out who's going to be the next president, okay? So just be aware of that. We're going to follow the same exact formula. Pop quiz, what is the monthly time frame for? What do we use the monthly time frame specifically? If we can't determine this, then we can't trade the symbol. Okay, Peter got it right. Jennifer got it right. Tom got it right. Harold got it right. Christy got it right. If you're typing in direction, you got it right. Okay, direction. Now, we don't use complicated systems to do this. We're going to use trend lines, Fibonacci, support, and resistance. Very simple stuff. I don't draw my trend lines from back to forward. I don't do this because, frankly, this trend line doesn't do anything for us, and trend lines do 3 things for us. Remember, they give us buy zone, sell zones. They give us market speed, how fast, how slow the trend is, and then number 3, they give us U-turns, and U-turns equal opportunities. So we're going to actually we're going to zoom in on the chart, and we're going to view the current price, previous low, and work our way back. And as we work our way back, we're not going to curve fit it, but we are going to recognize what's U-turning the market now. And you need to be aware that the market likes to U-turn at, on, and or around the same price points. Type in a yes, you can see that since 2018, the last 2 years, 2 calendar years, well, actually 18, 19, 20, 3 calendar years now, the market has been U-turning right on that level, okay? Now, these markets, you know, they want to be beautiful. They don't like it when people call them ugly. If someone says this is an ugly market, market gets offended. So they want to be symmetrical. So oftentimes, whatever your trend line you have, just copy it, throw it up top, and that's going to give you the opposite boundary. And you'll be surprised how often you're going to see that, okay? So remember, these markets like to be beautiful. So if you got a good trend line, and you got the angle of the market, more than likely it's going to be mirrored the opposite side. Support, resistance, support, resistance, support, resistance, support, on its way towards resistance. Type in a yes if you can visually see this, and you can visually confirm it. So therefore, we have ourselves a 3 calendar year pattern. We have successful patterns back and forth. Market's on its way up towards resistance, $57.67. 57.67 is going to be the monthly high price, otherwise known as resistance, and resistance is just a fancy word for a future high price. Okay, so how far away is that? That's going to be, from where we are right now, that's going to be a 16.32% increase. 16.32. 16.32%. Now, if this market's going to go up 16.32%, would you like to buy low prices or would you like to buy high prices? What would you like to do? Most people say they're going to buy low price. Why? Because that's how money's made. You buy low, you sell high. You're going to buy a house, you buy it for a low price. You sell it for higher than what you bought it for. You sell ice cream, buy your ice cream for $1, sell it for $2. Buy low, sell high. You sell computers, sell a computer for $1,000, but make sure you buy it for $500, right? Buy low, sell high type of scenario. So we go to the daily time frame for the high price, low price. So we're going to strategically go to the daily time frame specifically, okay, to give us the high price, low price. Now, think of it like this, just like a business. Your CEO is your visionary. Okay, monthly time frames, your CEO of your trade plan is going to give you the direction. Your daily time frame is your president. Your daily time frame is going to let you know when you can trade and when you cannot trade. Okay, because if direction is up, your job is to buy low. Okay, and so if the daily time frame is at a high price, okay, daily equals high/low price. If direction is up, okay, and your daily time frame is at a high price, then you're buying too high and you're going to add on too much risk. It's just that straightforward. Okay, so when we view the daily time frame, we're not really too concerned about finding direction because we already have direction. We did it from the monthly time frame. Direction's up. We already have it. We need a low price, and we don't want to just buy a random low. We want to find a low where the market's used to. So here we go. We got an uptrend line. This is where the market is currently forming U-turns. So we have a low price. We have a low price. We have a low price. Now, these markets like to be beautiful, and traders tip. The markets do not like to U-turn randomly. They like to form highs and lows at, on, and around the same price points. Watch this. Boom. Type in a yes in the question section box if you can visually see that this market has created a beautiful boundary. These markets want to be pretty. That's just how it is. Okay, so there is an angle of the high. There's an angle of a high. Same exact angle causing resistance now. So, are we at a high price or are we at a low price on Micron Technology? You tell me. Are we at a high price or at a low price? Ron says high. Martin says high. Gilbert says high. Harold says high. So should we buy or should we wait? Should we buy or should we wait? You tell me. Should we buy or should we wait? If you want to make money, and you want to minimize risk, you want to buy low. So we should be waiting. So you should be taking profits. You shouldn't really be selling the market. I don't trade against the trend. Here's what I mean by that. When you have direction, think of trading like driving a car. You got a one-way street, baby, okay? And when you look at a one-way street, it is a sign that says all cars are going this direction. Now, you may be an incredible driver, and you may drive against traffic, but naturally your odds of getting into a car accident or getting pulled over dramatically increase when you drive against traffic. So when direction is up, if you have a desire to win more than half your trades, you should only look to buy. So I'm going to say this again. When direction is up and your desire is to win more than half your trades, you will only look to buy the market and then sell to take profits. If you trade against the trend, you are asking for trouble and you will figure it out on your own through your own trading. But ultimately, what I've discovered is when most people trade with the trend and not against the trend, they have a better experience and they make more money. And they usually have, okay, they usually have, more fun on the emotional side. So what we want is we just want this. We don't want anything complicated. We want this, okay? We're not making stuff up here. And what I mean by that is we're not going to do anything that the market's not already doing. So when the market moves from the top blue level to the bottom blue level, what you want to do is you want to let the market come down, and you're not selling that because you never know when the market's going to go up. And so that's not your job. Your job is not to guess the U-turn. Your job is to trade a U-turn. You bring in your counter trend line. When you bring in your counter trend line, okay, like this, bingo, breaks the counter trend line. This is where you want to buy the market. This means the short-term retracement is over. The extension is getting ready to start. Market pops up. You take your profit. We're going to wait for that again. And what I mean by that is we're going to look for this. We're going to wait for the market to come down. We're going to bring in a counter trend line. And when or if the market begins to break this counter trend line, when it begins to break this counter trend line, that is when we want to go to the 1 hour time frame, and if we're in the buy zone, we want to buy the market because more than likely the market's going to do this. And then we'll take our profits there. Type in a yes, why yes in the question section box. This makes a little bit of sense. So we are waiting for a low price near the uptrend line before turning to the 1 hour time frame and buying in 1 hour time frame to look to buy in the buy zone. Okay, so we're and then when or if the market comes on up, hits this level, as long as the market wants to be pretty, which most of the times it does, more than likely it'll do this. It'll come right back down. And then what are we going to do? We're going to come in with a counter trend line, and then we're going to look to buy the market in the buy zone off the smaller time frame. When or if this happens, we're going to look to buy the market, and then we'll take it all the way to the monthly high price. And so realistically, Micron Technologies, we're going to have 2 more runs. We're going to have a nice little push, let it retrace, push. And it's going to, and as of right now, that's what the evidence is showing. Type in ME if you learned anything tonight. And let me go ahead and rename this too. We'll go rename. We'll say 09162020. We're going to say Wealth Press TV, and we're going to call this MU. Save it. Turn sharing on. If you click on this link in the question section box, okay, it will bring you directly to this page. Directly to this page right here. And this page, you got the monthly time frame. You will see my notes. You will see my target. You will see my outlines. Then your daily time frame, you see my notes. You will see the drawings I have for you, and it's all yours. Okay. Now, would you like to see a sneak peek at a secret weapon that I use? Type in a yes if you'd like to have a sneak peek. I'm going to show you the results first, and then I'll show you my secret weapon. So one of the things that I do with Wealth Press is I send out alerts, and it's called money magnets. And I started doing it in July 1st realistically. So July, August, now we're in September, 2.5 months, we're up 290.49%. Okay, on the option side, and we're up 32.5% on the stock side. The average investment is $152 per contract. We've made $629 in return, 6 per one contract at a time, so 629 divided by 155. We made 4 times the average investment. To put that into perspective, if you invest an average of $1,000 per opportunity, you would have already made $4,000 in return. So it's pretty dang good. It's working really, really good. So how is that possible? Well, one of the things which I do is I follow this same exact process, okay, where I use the monthly time frame for direction, the daily time frame for high price, low price, the 1 hour time frame for zones, but to help me find my exits, I use what's called money magnets. And a money magnet, let me go ahead and show it to you. Let me go to my daily time frame. It's these blue lines. Type in a yes if you can visually see these blue lines. I mean, these little pink, little purple lines. So these purple lines, believe it or not, these purple lines let me know where price may go next up to 9 out of 10 times. That's pretty big move, but up to 9 out of 10 times. Let me visually show you how this works. So, you know, I'm not going to spend a ton of time on it, just like a minute. I run a formula where I look at the previous week's characteristics of the trend. I look at the high price, low price, close price, and then statistically, it takes the characteristics of the trend and it says based upon probability, this is where price should go next, okay, which is this purple line. And then what I do is if as long as it aligns with my formula, I will strategically go to a smaller time frame and I'll look to buy the market towards the money magnet price. Okay, bingo. You can see how the money magnet was fulfilled. Now, do me a favor, type in a yes in the question section box if you can see that we have a money magnet below the market and the market hasn't. So what this tells me is we have up to a 9 out of 10 chance that we're going to fall back down. Okay, look how it fell down. Okay, so now we have a money magnet above the market. We're going to expect the market to rally. Market rallies, hits it. Now we have a money magnet below the live market. Here we are. So before we talk about this one, let's just look at the statistics. Okay. And statistically speaking, we're going to count the money magnets on the screen. We'll let you know how many have been fulfilled, how many haven't. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36. I have 36 money magnets on my screen. I get 1 money magnet a week. How many have not been fulfilled? That has not been hit. That has not been hit. That has not been hit. So 33 have been hit, which means, bring up my calculator, 33 divided by 36, I have a 91.66% strike rate. What's a strike rate? Strike rate just means that the pattern of money magnets is working 91.66% of the time right now. It doesn't mean that's the win-loss ratio. It just means the underlying pattern works. Another way to say this would be, imagine trading with no stops. We never want to do that, but imagine if you trade with no stops and you took and all you did was trade towards the money magnets, you would have won 33 out of your last 36 trades. Type in a ME in the question section box if you like the idea of winning 33 out of your last 36 trades. Well, we do trade with stops and we do trade with an entry criteria. And so because of that, we like to control drawdown. We don't like to hold losing positions. So the goal and track record goal is to have a 7 out of 10 or a 70-30 split. So for every 10 trades we place, we expect to lose 3 for every 10 trades we place, and we try to win 7. And what we do is we trade towards the money magnets. And so far, in the 2.5 months, we're up 290%. So the goal is to make 100% on the premium every month. And so far, we're exceeding the goal, which is good. Now, back to what I was saying. Why is this important? Here's the pattern. I'm going to bring on money magnets. Type in a yes into the question section box if you can see that there's a money magnet at the bottom of this blue line. So the analysis is confirmed and states that Micron Technologies has a 91.66% chance to fall to 45.67 before the rally, which basically is going to give me the competitive edge to know with high confidence that I have up to a 9 out of 10 chance that if I just simply wait for price to fall, once this is hit, I can start buying it on the way up. And that's going to give me my high win ratio. Type in a yes, and that makes a little bit of sense. Okay. So one of the things which we wanted to do is we wanted to basically make things relatively simple. But before I do, let me just ask you a question. Type in a me, M-E, if you learned anything tonight. Type in a me if you learned anything tonight. Type in a me if it logically makes sense of how we use the monthly time frame for direction. Direction is up. Then we go to the daily time frame for a low price. We find the low price. And then we go to the 1 hour time frame to confirm the zone of how that little formula will help us with higher winning percent trades, winning more than half our trades by default. So one of the things what we wanted to do is we wanted to give everyone in this room an opportunity and reward you. And I'm just going to cut to the chase. I'm not going to sell you anything. I'm not going to sell you or try to talk you in anything. I'm just going to show you. When we win these trades, we're winning 59%, 75% premiums, 34% premiums, 100% gains, 63% gains, 53% gains, etc. Okay? Type in a me, M-E, into the question section box if you'd be interested with me sending you an alert, one alert a month, to help you make between 30 and 100% on your premium, just one trade a month. I'll send you weekly recaps. And we're not going to, and type in a me, M-E, if you'd be interested if I told you it's $5. Not $500, not $1,000, just $5. $5 a month. I'll send you weekly recaps of what's going on in the market, of what my watch list is, and I'll send you what I believe is going to be the greatest symbol for the upcoming week. It's a taste of the money magnet. It's called Money Magnets Express, okay? So specifically, it's called Money Magnet Express. I utilize the formula that I just taught you tonight, plus I use my money magnets to help me find my exits. So specifically, we'll show you where to enter in, what price to enter in, what price to exit. I give you two signals. I give you the entry, the stop, and the limit for the stock. And then I also give you the option for the proxy. So I'll give you the symbol on the option. I'll give you the expiration date on the option. I'll give you the strike rate on the option, and I'll give you a max buy on the premium. So you actually get two alerts. You get a stock alert, and then you get an option alert. Now, the key is I don't recommend anybody, walk away from their computers, because I like it when you understand the whys behind it. But, you kind of see we're up 290% within on the normal program. And if I can send you a winning alert where you can make 30 to 100% a month with just for $5, I think it's worth your time. Now, we do provide you training, which is nice. So every week I'll send you a video every Wednesday of all the closed positions, all the open positions, and all my watch list for the normal program and also for your Money Magnet Express. You do get support, okay? Now, the value here is $5,050. It just, look, it's $5. Type in a me, M-E, in the question section box if you'd be interested to sign up for $5 to receive one alert a month. You can receive a text message, an email, and then I can send you weekly videos. Okay, here's what I want you to do. Click on this link in the question section box. you can sign up right now. And click on that link. It's $5. It's $5 a month. Okay, so it's a monthly $5, and you can cancel anytime. And then what's the refund policy? If you hate this, we'll give you your money back. If for any reason you're not 100% satisfied with your membership to Money Magnets, you can cancel anytime and get your most recent month refunded, no questions asked. So we're going to send an alert next week. Okay, it's probably going to be more. It may be Friday, but interest rates just came out. I want to see how the markets react, but it's more than likely by the end of next week. Okay, it's $5. So here's what you get. Money Magnet Express, 1 alert a week. 1 alert, not 1 alert a month. 1 alert a month. 1 alert a month. It's $5. You get weekly recap sessions every Wednesday. So every Wednesday, you're going to know what symbols I'm monitoring, what symbols I'm watching, all included for $5. Why are we doing it? Why not? It's one alert, and we're making money. The program's working. Anyone who wants to try this out and kind of see it for yourself, the high win ratio, this is your chance. Money Magnet Express hotline, $5. First name, last name, email address, phone number. Billing information, credit card, complete your purchase, you're done. Once you sign up, you get a username and passcode to your online education. Do me a favor, you're signing up online, just type in, hey, I signed up. So we want to make sure that you get your materials as soon as possible. All right, so David signed up. Congratulations. Yeah, you will get text notified that there is an alert. All you got to do is log into your online education. We'll have the whole outline there for you. Specifically, you get the entry, you get the stop, you get the limit, you get the symbol on the stock side, and then you get the option if you want to do proxy. David signed up. Congratulations. 870 signed up. Congratulations. Tweety Bird signed up. Congratulations. Caroline signed up. Congratulations. Good. Christy says I signed up last week. Congratulations. You get a new alert next week. Okay. Gilbert signed up. Sunday signed up. Dennis signed up. Good. Yeah, like I said, it's $5. And at the end of the day, if you get an investment return on the investment, think about it like this. Let's just talk about. Dan just signed up, so show me the money. I love it. John signed up. Don signed up. Look, Terry, just click on this link in the question section box. I'll just send it to you. So here's what you're going to do. Just think about it like this. $5. What if all you got was me monitoring Micron Technologies, and then next week I send out the buy, and then let's say you just took the stock trade itself, okay, and you got a 15% gain on the stock trade. You make your money back, but you're not going to pay $5 just to make $7. So you're not going to want to do that. You want to make way more than that. If this rallies, this 15% increase on the stock is more than likely going to be a 70 to 80% gain on the option. We'll probably do about a $100 option, maybe a $200 option, and you're going to make 70 to 80 bucks, anywhere between 70. If you do a $100 option, we'll probably make $70 in return. If you do that's per option you trade. If you do a $200 option, you'll probably make 140 bucks. Type in M-E in the question section box if you'd be happy spending $5, getting my weekly watch list, and then making 140 bucks in return. If that's all it did for you. Like I said, it's a sweet deal. Jennifer's in, Melanie's in, congratulations. GUI's in, congratulations. So here's the link in the question section box. I'm sending it to you. Where you just typed in, I'm sending it to you a couple times. Hey, John. John just signed up. Congratulations. Karan signed up. Oh, nice. So you did the 12. That's a good deal. Yeah, for sure. Here's the link in the question section box. Now, it's Zion. So you get, once again, you click on it. It's going to bring you directly here. What are you going to get? Money Magnet Express. This is not the full Money Magnet program. This is the Money Magnet Express. This is like kind of, it's trying it out. Getting your toes, get your toes in the water type of scenario. Test the water. Do you like the temperature? You know, is it too hot for you? Is it too cold for you? No problem. Is it just right? Awesome. You know, you get one alert a month, one winning alert a month. That's the goal. You get my weekly recaps. So every Wednesday, I actually sent out the recaps this week. Actually sent it out today. And then you get your hotline, $5. Put in your contact information, first name, last name, email address, phone number, billing information, credit card information, complete your order, you're done. Estella's in, congratulations. 871's in, congratulations. Faith signed up, congratulations. Perfect. Yeah, you got a smoking deal. I think they're actually getting ready to increase the price. Yeah, $5 is $5 a month, so it's a monthly subscription. I think there's like, people are saying there's an upgrade to where you can upgrade and for $39 for the entire year. Holy smokes. DEN says this is not live. Oh yeah, this is definitely live. It's 9/11. 9/11 p.m. It's late. It's 9/11 p.m. Eastern time. It's September the 16th. It's Wednesday night. DC's in. $39 for 12 months. Yeah. You know, as long as the track record holds true, even you're going to make all your money back in the next trade in theory. You know, and if not, it's $5, and if you don't make any money, you go ask for your money back. Look, if this doesn't work for you, get your $5 back, get your $39 back, or your previous month back. You know, Tim joined on Monday. Congratulations. Don't forget, we have your Carrie. It says end for a year. Awesome, awesome, awesome. Congratulations. Hey everyone. The answer is okay. It is live. All right, everyone. I want to say thank you so much for the opportunity. I really appreciate the chance to work with you and serve you. I understand that you could have been doing anything and everything other than this tonight. So we truly appreciate the chance to serve you. We do everything in our power to surpass your expectations. For those of you who have signed up, be on the lookout. You're going to get a username and passcode. Hopefully, you're really happy with your decision. I think you are going to be, especially in the next couple of trades. Be on the lookout. By next week, we're going to send out the alert. Okay, so you're going to get something brand new. And in my opinion, I'm going to be monitoring Micron Technologies. Just logically makes sense that this is going to make a lot of sense for us and for you, and hopefully be very profitable. Hopefully you learned a whole lot. Remember, this is a formula, so monthly timing for direction. Let's not complicate things, okay? The market can only go up, it can only go down. So the 50% chance of being right or wrong. Just trade good risk management, okay? Don't risk all your money in a single trade. Success is over time, is not one time. For every 10 trades we place, we expect to lose 3. We anticipate to win 7. So we're looking for that 70-30 split, okay? What else? We want to minimize risk as much as possible. So when we buy low. We buy in the buy zone. We do not buy high prices. And we look to win more than half our trades. And when we win, we physically make more money than when we lose. We physically lose less money. So I really hope you learned a lot. We sent you those links. And I'm going to pass this over back to Andy. And so I want to say thank you to Andy, Brendan, for having me on.
Oh gosh, you know, Josh, I've just learned so much tonight, and based on these comments that I'm seeing coming through here, I mean, these kinds of comments are just exactly what we want to see here with WPTV. People saying, "Oh, I've learned more tonight than I have in months," you know, things like that. It's just really a great opportunity for these people, and for people to test the waters. This is such a great opportunity. $5. You know, people blow a lot of money out there. So, so $5, you can't go wrong with that. I saw somebody say I'd pay $5 just to learn from my mistakes. That's exactly right. Yeah. So I thank you for bringing that opportunity to us and for spending the night with us.
Oh, absolutely. I appreciate the chance. I appreciate the opportunity. I appreciate everyone's time.
Yeah, and guys, just so you know, for people out there watching, WealthPress TV is here weekly, Wednesday nights at 8:00 p.m. Eastern Time. And we hope to bring you more people as knowledgeable and talented as our Josh Martinez is here that joined us this evening. And hopefully Josh will come back with us sometime and share some more of his insights with the people out there like myself who would love to learn how to work this market, but don't know that first step to take. So
and we already have that Fibonacci sequence one. We got to find the link for that somewhere. Make sure people get a hold of that and just make a trilogy out of this if possible.
That's exactly right. That's exactly right. So thank you very much. And thanks, Brendan, for letting me join you guys tonight. And I look forward to next Wednesday. I hope to see a lot of these same viewers there next time too.